What's going on YouTube? My name is Tyler Self, and in today's video I'm going to be going over some very important qualities of a successful investor. Alright, real quick, if you are new to the channel, again, my name is Tyler Self. I make videos here on YouTube documenting my journey as a value investor, and I'm currently just in the process of growing my portfolio and learning as I go. And if that's something that you're interested in watching and staying with, go ahead and hit that subscribe button and stay tuned. I've got a lot of different videos on this channel about personal finance as well as investing in the stock market, so feel free to check out some of those. I'll leave some links in the description below. But enough of that, let's go ahead and get started. Really quickly, let's go over some important definitions and phrases whenever it comes to investing. First is dollar cost averaging, or DCA, which is just the practice of systematically investing equal amounts spaced out over regular intervals regardless of the stock price. So what this basically means, this is actually a strategy of investing where you basically invest on, it could be a semi-regular basis. I personally do this myself, and I invest a certain amount every single week regardless of the price. Generally just try to build up my shares over time. It's been a pretty good strategy for me, and it has allowed me to kind of mitigate my losses because I am buying regardless of the price. Whether the price is up or down, I'm still buying. So yeah, that's dollar cost averaging in a nutshell. Next is time horizon, which is simply the timeline in which an investor plans to give value on their investments. What this basically means is, how long are you wanting to invest? Are you wanting to invest for a year, less than that, 5 years, 25 years? Whatever your timeline is, that is to be considered your time horizon. Next is asset allocation. What this basically means is how you diversify your capital or the money that you invest. We'll talk a little bit more later in the video about diversification, but last on the list is volatility, which is simply your risk tolerance. It's the degree to which a traded security fluctuates in price. You can have a portfolio that's more volatile and maybe more risky, has some more potential reward, but also has some more potential risk. Or you could have a more conservative portfolio that is less volatile and, may not yield a higher return, such as a more aggressive portfolio, but you'll also kind of cut back on your losses. And again, we'll go over risk tolerance a little bit later in this video, but without further ado, let's go ahead and talk about the tips for being a successful investor. Number one, you need to stick with your strategy. There's so many different types of strategies in terms of investing in the stock market out there that you can look into. Me personally, I choose to do kind of an income or value type investing. I'm investing in the long term, and I personally believe that that is the best method for me, myself. I'm 22 years old. I have a very long time horizon, and I understand and am more than willing to accept risk in my portfolio, but it's very important to select the method that best fits your time horizon and risk tolerance. That's what I'm talking about. So somebody who is maybe 45 years old may not invest the same as somebody who's 21 or 18 years old. It just depends on whatever risk that you're willing to take on, whatever time horizon you have. If you are single, living at home, you may have more tolerance for risk versus if you are, maybe, like I said, 45, 46 years old, have a family to support. It can just affect what type of method that you do. I've laid out 4 different methods here that you can consider looking into. There's value investing, which refers to like dividends and income growth. Generally more conservative stocks that pay consistent dividends on a quarterly, monthly, or annual basis. That's the method, again, that I personally do. Then there's growth investing, which refers to perhaps newer stocks that have a lot planned for the future. Then there is momentum, which can be essentially just buying the dip. And that's a whole nother process I may make a video on in the future, is buying the dip and kind of my general process for finding stocks. Then next after that is dollar cost averaging. This is pretty important as well. We already talked about the definition of that, but these are 4 different pretty good styles of investing that you can use and implement within your own portfolios. Next important thing about becoming a successful investor is understanding risk. It's very important to understand how risk and returns work so that you can have a better grasp on the market as a whole and keep your emotions in check. This is super important. There are several different resources out there that you can use to stay informed, But generally speaking, understanding your risk tolerance. But yeah, risk tolerance and time horizon, they go hand in hand together. Again, it just goes back to sticking with whatever strategy you're doing, keeping your emotions in check, and understanding that it's all a part of the process. Next is be willing to learn. This is probably one of the most important parts. You can read books. I have a few books listed in the description that kind of go over different aspects of investing, as well as you can watch YouTube videos like the one you're watching right now. You can listen to podcasts. There's quite a few resources out there that are totally free that can teach you pretty much anything in terms of investing. You just got to put in the work and find what you're looking for. Some topics I'd recommend looking into are basically how the stock market actually works as a whole and whatever strategy that you're looking into. So if you want to look into value investing, go find a few YouTubers who talk about value investing, subscribe to their channels and start learning, because that's literally what I'm doing right now. I have several different YouTubers and Discord communities that I'm involved in, and I've been learning every single day about how value investing works, why I want to continue doing it, etc. It's just super awesome. This is, again, crucial for building your confidence and your competence as an investor. The more you learn, the more you earn is basically what to get out of that. Last but not least, don't be afraid of failure. This might get a little bit motivational here, but in life, we do have momentary disappointments. They are inevitable. In terms of investing, risk is a part of it, and some days, you may see your portfolio down quite a bit. Other days, it may be up quite a bit. But it's very important to know that this does not mean that you are a failure. You're only a failure when you give up, when you quit, when you say, this is not for me, I want to give up. That is when, in my opinion, you actually failed. But as long as you understand why you started and learn from your failures, and learn from your failures in order to grow and be better in the future, I think that that is the best case scenario, and I would not consider that a failure at all. Now let's talk briefly about diversification. It's very important as an investor to not put all your eggs in one basket. The way you can diversify is by having multiple different sectors within your portfolio. This can be different stocks, so you can have different types of stocks, as well as some ETFs or exchange traded funds. Risk tolerance. Having less risk can mitigate the potential gain, while having more risk can accelerate it. What this basically means is you can see from here, the more percentage of bonds you have, for example, your return may be less, but your potential losses over the years are also less. This is my Drip Too Hard portfolio, the portfolio that I've been investing in since November 23rd of 2020. This is my income portfolio. It's, like I said, pretty new, but you can see within the portfolio, I have multiple different sectors that I'm investing in. As well as you can see when I go into the foundations, I have literally 30% of my portfolio in ETFs. So I have a few stocks in tech, consumer, real estate, energy, financials, etc. Multiple different sectors I have different holdings in. This allows you to spread out your risk, and if one sector is not doing so hot, another one may be doing better. Again, I believe that the key is actually finding a balance that will allow you to sleep at night. So you don't want to be too risky where you're just stressed out, freaking out. You want to be able to have enough risk where you're happy with the return, but not too much risk so that you can't sleep at night. All right, now let's go over some of the qualities of a good investor. Patience. Trust the process. Understand your time horizon and stick to the plan at all costs. Goal setting. It's very important to set clear and measurable goals for yourself. These can be large goals and small goals. For example, if you want to see your portfolio at a certain value by next year, go ahead and write down some of those goals, and doing this will actually help you stay motivated to continue investing and stay in the game. Next is persistence. It may become tempting to sell off your holdings in the event of a market downturn or a correction, but you got to keep your emotions in check and remember why you started. This goes back to goal setting and patience. It all kind of goes together, you'll see, but generally speaking, it's just super good to build thick skin and stay in the game regardless. You can find any stock of your choice, look at the short term, and generally speaking, when in doubt, zoom out. So we go out to the 5-year, you can see the way that this has gone up. So yeah, it may be down temporarily, but you got to understand, Apple is up literally 400% almost in the past 5 years. Now, If you got scared during this little correction that's been happening, if you got scared, oh no, my Apple's down 2%, should I sell it? No, you should not sell it. Look back, even just in the past year, it's beat the S&P 500. It's up 32%. It's so important to stay persistent. Persistence and resilience are key factors of a good investor. Next quality of a good investor is being knowledgeable. A good investor understands the value of investing in him or herself. The more you learn, the more you earn. This goes back to what we were talking about a little bit earlier about all these different resources that are totally free out there. There are some books and stuff that may cost like $5, but what is $5 if it can literally teach you something that is invaluable and will stick with you forever? You build the knowledge base, you learn, and literally you can find most of the stuff just on YouTube. I've learned most of what I've kind of developed and learned over the past few years of my investing journey. I've learned most of this literally just from YouTube videos or podcasts and books. There are so many free resources out there. It's ridiculous that some people make the excuse of not being able to learn. Last but not least, mental fortitude. It's so important, just like persistence, to stay motivated and stay consistent. As an investor, we have to keep our emotions to the sidelines and stay focused on our goals. Mental fortitude, persistence, patience, these are all very difficult, and they are fleeting out of our society. More and more people each year are so determined on getting the rich quick or, instant gratification. It's something that we've seen time and time again. But we need to stay strong. We need to stay persistent and patient and stay focused. Get that tunnel vision on your goals and get it. Chase your goals, and you guys can do this. But anyway guys, that's about going to wrap it up for this video. I really hope that you enjoyed the video, and if you did, don't forget to give it a thumbs up and subscribe and hit the bell notification for more content so that you never miss an upload. I try to post videos relatively consistently about just my journey, as well as different aspects of the stock market and just investing and personal finance in general. Feel free to stick around, and if you have any comments or concerns, feel free to leave them down in the comment section below. I generally try to respond to virtually all of my comments, so go ahead and do that. And like always, I will see y'all in the next video. Get out there, invest, stay motivated, and I will see y'all in the next one. Peace out.